FXN Mentoring. What's up, guys? Welcome back to Trading with Market Makers, and welcome to week 9. So, as we last week talked about trading the London session specifically, you guessed it, this week we're going to be talking about trading the New York session. So, we're going to break down how to trade the New York session. We talked about last week, London session. We went through a whole 2 weeks of trading the London session. So we're going to do the same thing for the New York session. So you can get a better idea as to what I'm looking for and what you should be looking for when trading this session. So let's talk about a couple things regarding the US session. So the first thing is that you have a slight advantage over London. Why is that? Well, you have a slight advantage because you can actually see price action. You can already see what happened for London. So you can better anticipate what are the potential options that you would have. And so when we talk about options, these are going to be the main primary options that you're going to have when you're trading the US session. So you're looking at continuation trades, which typically come in the form of type 3s, type 4s, or anything that tags the 50 EMA in the US session. And you'll see what I'm talking about because I'm going to show you examples of all this stuff. So continuation trades, you're going to have reversals, right? So let's say if in London you had, let's say, a type 1 pattern, there's probably maybe a good possibility that you could have a reversal, right? A reversal W come in the US session, okay? And then the third option is going to be multi-session setups. Essentially, when you get the first leg in London and the second leg in the US session. So typically for type 1s and type 2 setups specifically. You still do the same thing that we did for London session. You still identify where you are in the market maker cycle. You still ask yourself, how far am I from the closest peak formation, right? So you count how far are you away from that closest peak formation? How many pips have you moved away from that? Because depending on how many pips you've moved away from that will depend on where could the next possible peak formation come into play. So same thing as London, whereas if you're coming off of a peak formation high, and let's say the average or the 3 times ADR, let's say it's 300 pips, and you've already gone down 280, well, you're pretty close to 3 times ADR, so you should be aware of the possibilities that you could get a direction that does not go against your directional bias, right? So just keep that in mind. And the 15-minute chart, I'm looking for the EMAs. Where are they? Is it possible to get a setup that pins any of them? This is going to play a really big factor when we talk about continuation trades. Because continuation trades, typically all of them, most of them, like over 90% of them, are going to pin the 50. Okay? Another thing is on reversals. When you have reversals, you're going to most likely take profit at the 50 as well. So the 50 is going to play a much bigger role in the US session than it would typically in the London session. Okay? So keep all that in mind. And you're going to do the same thing. You're going to wait for the price action to play out and let the market makers show you what they want to do. Okay? We're not here to guess. All right? We're here to wait patiently, let them show you what the setup is going to be, and then trade if we agree with that setup. If all of the confirmations that we want are there or not. Right? So let's go ahead and let's move on to the charts And let's break down this US session so I could show you an example of each setup that we're talking about along with the confirmations. All right, guys, so let's go ahead and let me show you some different examples of each different type of setup that you can expect essentially to get during a US session. That way you can at least be familiar with what they look like. So let's go ahead and first start off with, I believe I just saw one here. Let's do this one as a multi-session right here. So if we look at this particular setup here, you could see multi-session, right? Clearly, we get a first leg in London and then second leg in the New York session. Now, the clues to this particular trade setup, okay, what works for you is that you're coming off a peak formation low, number one, so you're looking for buys anyways. Secondly, you get a multi-session, right? So the pattern is there, type 1 pattern is there. Multi-session, the timing is correct. You can see also on the TDIs while you're down here, you're pinning to the 800. I mean, there's so many freaking different confirmations here. So the question becomes, what is the entry, right? I want you to pay attention to essentially this right here. Pay attention to this block, this right here of structure, right? Pay attention to the first leg comes down and then we do nothing but work. We work, we work, we work, we work. Okay? And then we end up getting one candle that pushes out. Okay? And it takes us out of this bottom space that we were in. So basically this bottom half here. So right there. That's the apex of that W. Okay? And then this essentially takes us out of that particular apex. And then we get a pullback on the next candle. So as far as clues go for entry, because we don't really get like a star pattern or a railroad track or anything like that, right? So what happens, remember what happens when we don't get a star pattern, when we don't get a railroad track or a quarter wood or anything, right? We wait for a cross of the 13 or a 5 and 13 crossover. So in this case here, the price action closing above the 13 is on this candle. The pullback candle is the entry, right? So the entry is going to be here. Obviously, the stop loss goes below the 800. And then we have to go above the 50 because obviously it wouldn't make any sense to just go here. Okay, to go here, obviously it's going to be a 1.3 to 2. So if we can just get a 2 to 1, and typically it's going to be, if we go to just the bottom of the Asian range is 2.5. This ends up giving us like 4, right? And so the biggest difference that I have seen myself in these trades stopping or going past the 50 is if we are literally just coming off of a fresh peak formation, right? And we have a lot of pips to go. Okay? A lot of pips to go. So typically those tend to go over the 50 EMA. Okay? So this would be a great example of what we would want out of a multi-session trade setup on the New York side. All right? So here's an example of a continuation trade. This one would be a really good example of a continuation trade that you would want to take. The continuation trades that you want to take are the ones that go along with your directional bias, right? So we're looking for, continuation trades that are typically type 3s or type 4s most of the time. The important factors to a continuation trade is that they're pinning the 50, right? They're getting rejected from the 50s is probably one of the major points. Okay, so you can see here we have an early move, super early move in London, and then we worked all the way to pull back to the beginning of the session. Okay, and then we get rejected at the 50, which also just happens to be the middle of the range as well, right? So the entry itself can be anywhere after, because this right here is not an entry. This is a railroad track to go up. This is not a railroad track to go down. What you do have here, though, is a nice God pattern or star pattern here where you have a big bullish candle, 3 dojis, and then a bearish candle, right? So anywhere here would be a good entry for you. And then essentially you're just looking for a 2 to 1. In this case, 2 to 1 is just basically, if you look to the left, right, to the structure of where the London reversed at. Okay. Same thing, you're bouncing off the 50 as well here on the TDI. So your directional bias is correct. TDI is helping you confirm. You're pinning to the 50. So everything is there for you. Okay. This is a really good example of a continuation trade. Here's another example of a continuation trade. We're coming off of peak formation high, so we're looking for sells. We get an early move during London, and then a nice pullback that goes right to the 50, gets rejected at the 50, gives you a star pattern here. The entry is essentially going to go right here, right on this pullback. Your entry is there. Your stop loss is right above the high, obviously. And then same thing, you're just going 2 to 1, okay? Whatever that is, whether it be 40 pips, 20 pips, depending on your stop loss, obviously, but you're just going 2 to 1. On continuation trades, you're going 2 to 1. That's it. Just make it simple for yourself. Don't make it complicated. If you want to watch it and then get as much out of it as possible, you can do that. Okay, you could do that. That's up to you, depending on what kind of trader you are. Here's an example of a multi-session type 2 trade on pound USD, where you get the first leg in London and it works all the way down and comes back up, retest that high of Asia there, and gives you a star pattern essentially. So obviously your entry would be right below here, right on this pullback as your entry, and then the stop loss obviously goes right above it, and then you're going again 2 to 1 risk to reward ratio, which is right there. Your directional bias is correct. Multi-session type 2, you get a good pattern, and then also you could see on the TDI you're bouncing off the 50 as well. All right, guys, so let's go ahead and let's play out a couple weeks, and let's see what we end up getting during this US session, and see how many we can win, and frankly, if we lose any. So let's see, what are we going to do today? Let's go ahead and pick, I don't know, let's do pound and ZD. And I know. Yeah, so let's do pound and ZD. And we'll shrink it. And then we'll go back. Let's do something probably, I don't know, beginning of the year. Let's do this. We'll start here on a fresh week. And let's open this up. All right, so, okay, well, we're coming off of a peak formation high. That's great. So we're looking for what? We're looking for sells, right? So we're looking for sells, and we're going to do exactly how we did it last time, to where we're not going to really play through, or we're not going to play the London session this time. We're going to skip through the London session and literally just get to the U.S. session, right? So that way we can just focus solely on the U.S. session trading. Okay, so let's just do that real quick. Let's skip over to the U.S. session here. All right, so coming into this particular session here, into the U.S. session, for coming off a peak formation high, obviously we're looking for sells. So if you start thinking about, what are the possibilities right now, currently sitting where price action is right now? You're it's either a continuation trade, multi-session, or a reversal, right? So if you look, we had a type 3 pattern here in the London session. It came down. So possibilities for this are pretty wide open right now, because this could be a first leg, and this could be a second leg. It could be a scenario of multi-session. For it to be a continuation trade, this would need to come up to the 50 and tag it and then get rejected, or come up to one of these EMAs and get rejected, right? For it to be a continuation trade. All right, so let's see if we get anything here. All right, so there's the box there, and nothing as of yet. I mean, this possibly could be a reversal here, with this being the first leg and this being a second leg. I mean, you do have that following as well on the TDI, so that very well could be a trade setup. It does go against obviously the directional bias, but again, we're trading the U.S. session, so there's three possible scenarios. If we had a trade that went in our directional bias in London, there's a possibility we could get a reversal to trade up to into the New York session. So those are all possibilities, right? So you have to just be open-minded to that. So if this were a trade set up here, I'm counting this, because I'm looking at the TDI as well, as this being the first leg here, because the TDI is also kind of agreeing with me here. This would be, the second leg, and this is really a third leg is what it is. But it's in the US box, which is really what we want. We get a railroad track here and a pullback, so that's all good. So the pullback here we could use as, I would use as an entry here. So anywhere in here would be fine, and then we're looking at about a 12 pip or so, stop loss. As far as where we're going with this, I mean, we have the EMAs in our favor. So you could see getting to the 50 is almost 2-to-1. Ideally, if we can just get to the bottom here of this range, we would be great. And then obviously we can use the 50 or the 800 or the 200 as also take profit points if this starts to move up any higher. Okay, so far that's going to be the trade setup. This is going to be a multi-session type 1 reversal trade on this, is how I'm looking at this trade setup. So let's see what happens. Boom, there we go. Nice. So there's one trade right there off the rip. All right, let's forward to the next day here. All right, so remember that every day we're taking in all of the new data every day, right? So just keep that in mind. Okay, so what is this, Tuesday? So Tuesday, what do we end up getting here? Start of the New York session, kind of the same thing actually. We ended up getting a huge move straight down. So what are possibilities here on this particular one? For me, I'd probably be looking, because we're opening all the way at the bottom here. I'm probably going to be looking for another reversal. Yeah, I'm probably going to be looking for another reversal. The only thing that would change my mind about this is if this immediately like starts going up to tag the 50, right? If it immediately starts doing that, then I might consider a continuation trade to go further down. Okay, but there's nothing so far right now. Let's see what happens here. Okay, so check this out. So we're seeing this big bearish candle followed by three dojis. So I'm already waiting. In my mind, I'm already waiting for a bullish candle here. And what it would mean to me would basically be this right here would be a first leg, and then this is the second leg being created and giving us either a star pattern, God pattern, whatever you want to call it. Basically a big bear with three dojis, and then I'm waiting for a big bullish candle here to give us an entry here. Let's see. Another doji. So, yeah, four dojis in a row. Here, right here. There it is right there. So 1, 2, 3, 4, 5 dojis in a row. You see that? Five, that would be that's the second leg, essentially, right? Is that particular pattern there. Okay, so now the question becomes, okay, what do I do for what's going to be the entry, essentially? Well, if we put out, if we put this out right here, it's about 20 pips. Okay, so to get a 2-to-1 risk reward ratio, we really have to go again almost to the same thing as before here, to the bottom of the Asian range. Okay. Ideally on this, probably going to be looking for a pullback. Yeah, probably going to be looking for a pullback on the next candle. If there's no pullback, you can take the trade, but I would probably limit the risk by lowering the lot size on this. For me, if you're going to take the risk, lower the lot size. Now, granted, this is pound and DD as well. I just remembered that. So, pound and DD, I mean, you're going to be using up to 30. So, may not be that bad on this particular pair. But if you're trading like a regular pair, like Euro CAD or USD, anything like that, then 20 pips is on the US sessions pretty, pretty on the high side. So, just to lower your risk, you might want to lower your lot size. Okay. But the plan here for this would be just to get a 2-to-1. And honestly, to get to 2-to-1, we're going to have to go to basically the 200 or the bottom of the range here. Okay. And that's going to be it. Okay. So this trade right here, I'm trading it as a reversal multi-session, right? Because the first leg is outside, damn near in the London box. Okay. So it's how I'm trading this as a reversal. So we do get a little bit of a pullback, which is good. It'll probably save us maybe 1 or 2 pips. So maybe right there, and goes from, yeah, maybe a pip or so. So not that much. But here, let's just put this at 2-to-1 here. And let's see what happens. All right, so there's another trade there. Let's go to the next day. Let's get to the opening. Here we go. All right, so here is the opening. Now, here's the thing, right? We're coming off of peak formation. What is our ADR about this? It's got to be pretty big, but we've only gone about 280 or so, I think, right? Yeah, 290, 300. So this pair tends to move over 300 pips. So think about this. The way I'm thinking about this now is why are we having, if we're not done going down, meaning selling, right? Why are we having price action do this? Okay. So what do you think when you see this behavior like this? You have to start thinking of the fact of why are we doing this? You know, are we doing this because we're trying to reset or something, or what? You know, so that's the first thing that comes into my mind because typically, if we're going to keep going down, we wouldn't come across or we wouldn't cross the 800 here. The fact that we're crossing the 800 is kind of like a red flag of like, okay, well, are we looking at a possible reset now? You know, because we're not near 3 times ADR yet. But anyways, so right now, I mean, there's really the only thing for sell would be a type 1 here, right? Definitely not a continuation trade. Definitely not a multi-session trade. Even if this was the first leg, I mean, there's just for me this wouldn't make sense. So, not looking good right now. Yeah, this would be a no trade for me, a no trade day. It's just not worth it. Let me just skip it because it's not worth it for me. Hey, see how we've gone up like that? Look, we just continue to go up. See that? We're already pretty much up to here. So now we didn't complete a full cycle, right? So this right here becomes a situation of it being either a reset or a failed reset if we don't pass this high here. Let's get to the US session though. All right, boom. All right, so we're at the high pretty much, right? We're at the high here. Let me mark it just so we know where we are here. So we're at the high, and this is the lower high right here. Let me mark that as well, just so we can have some reference and don't have to look back to it. Okay, so we're retesting this high. So when I'm looking at this, right, for me, there's only two options when I look at the bigger picture, right? And I know that I'm retesting that same high from the previous week. One of two things is going to happen. Either we're going to get a retest and a sell off, right? Or this is just going to go straight through and it'll confirm the reset. If we get the sell off, right, this right here becomes a failed reset, right? We're still good. We have a new peak and we're still selling, essentially. For me, when I'm looking at this specifically with the US session, the only possibilities that I could see here is I was going to say if this holds right here, this wick with these highs, you could see this as a multi-session trade setup, be like a type 1. Here, let's see what happens. Yeah, yeah, that's what it is probably. Yeah. No? What is it? Hey, these candles are way too big. So I don't think it would matter, honestly. Yep, too big of candles here. Yep, no trade for me. I don't care if it ended up being that or not. It looks like this is exactly what it was. So we retested that basically is all we did. We retested that high. So more than likely it's probably going to be a failed reset. So theoretically we should still be looking for sells. Boom, yeah. Yeah, we should definitely still be looking for sells. Now this is Friday, so let's get to the U.S. session here. All right, so U.S. session on a on this Friday here. So what are our options here on this as far as setup here on this Friday? Right now, I mean, honestly, there's really no options that I could see at least that are clear and obvious. For sell options for me, it would have to be a continuation trade, but we need to get closer to the 50. I mean, I know this like pinned the 50, but this is not going to be a good trade setup at all. So, yeah, honestly, nothing at all. So, yeah, guys, nothing much here on this particular week. So, if we go back and we take a look at this week, there are only, what, two trade setups? Yeah, two trade setups. So 38 and 32. So around 70 pips or so for that specific week. So one thing that I think you're going to have to realize when it comes to trading the U.S. session is the pips are going to be lower. The trades, the trades themselves aren't always going to be there every day, especially like you literally just saw what I'm talking about within that specific week. And then also, you're going to have to be very patient to wait for the right setup, you know. And you'll know when as you're doing the back testing, you're going to know what setups you like throughout the New York session and what setups you don't. It's kind of the same thing with London. But as you go through the pairs, you're obviously going to find yourself attracted to certain pairs if you're trading specifically the US session. So your job, essentially, when you think about this, your job is, if especially if you're trading the US session, your job is to find what pairs specifically match your trading style for US session. So what are the pairs that specifically tend to repeat themselves over and over again? And I mean repeat themselves with the actual same setups that you like to trade throughout the US session. And really, that could be said as well for the London session, but I'm specifically more saying this with the US session because you're going to have times where you're not really going to get, a very good or any good setups, a lot of them at least. And so that's the thing about trading the US session. Okay. So let's do a completely different pair and let's see what we could end up getting here. Maybe some much better results here. So let's go ahead and do. Um, let's do Euro JPY and let's do something local here. So more closer. Let's do September here. All right, replay. All right, so let's open this up and let's see what we got. All right, so let's see what we can get here on this week. So obviously we're coming off a peak formation high, so we're looking for sells. Let's see how far. Yeah, this is a fresh peak, so we're not anywhere near. Yeah, we're only 100 pips in, so we're good. So we're not anywhere near any any new peak formations, I should say. Okay, so let's get over to the US session. And let's start to play this out and see what happens here. So I mean, it looks like we ended up getting like a type 3 pattern here in the London session, which is fine. Not a big deal. We could possibly get a continuation trade here, but we'd have to get a good confirmation to get that. So let's see. Oh. Ah. Damn. Okay, if this right here, if this candle would have been red, that would have been the entry candle there. Literally everything was going very well. Bouncing off the 50, bouncing off the 50, pinning to the 50 in the middle of the range. But then this candle messed it up. And then obviously, you see what happens now. But if this candle would have been red, that would have been a good entry with a pullback. Okay? For a continuation trade, I should say. So very important, always wait for the candle, wait for the entry candle to close first so you can confirm that that's the direction that they're going in, right? So the next candle would be the entry candle, obviously, because you're waiting for a pullback. So this candle here that you're waiting for the confirmation on, you always wait for that candle to close because this literally could happen to you. You see how big this whole thing was? It was solid red, and then boom, it popped up. So wait for that kind of confirmation candle to fully close and the next candle to open before you actually enter the trade. Very, very important. Okay? Very important. Yeah, this is not. Let's go over to the next day. All right, same similar thing here is that we're going past past 800 like we were in the other week or in the previous pair, if you remember that. So ask yourself, like, why are we going above this? Okay, let's play this out real quick till the US session. Okay, so you see the difference here though? Let me get to this US session. So look at the difference. See how there's no big push up? It stayed within this frame here. It's more likely just testing out this right here. You see that? So very important to test out that. Or to keep an eye out for that. So I mean really here there's no trade setup right now, but if I'm looking for sell setups, the only option that I would really have here, if I'm looking for a sell setup, is essentially like a type 2 pattern, a multi-session type 2 pattern, where this is the first leg and then a second leg would need to be developed in the New York session. So that would be the only trade setup for me for sell. So there you go. Now the question is, do you get a pullback? That's a big ass candle. So do you get a pullback? You do get a pullback. Is it enough of a pullback? Is the next question. So, I mean, 15 pip stop loss. Ideally, though, honestly, like I would probably do something like this. Because if they went all the way up, because you got to remember this is 8:30 news, by the way. Also, that's why this candle's like this. It's a wick high on each side, is because of 8:30 news. So, if market makers wanted to go up here and grab orders, right? They're not coming back, and you could see obviously they wouldn't be coming back. So the entry for me would be obviously this pullback here. And me myself, I would probably put a stop loss up here. I wouldn't put it all the way up here because it really wouldn't make any sense. So my stop loss would go here. And then if I'm looking to the left, if I can make it to the bottom of the range here, yeah, that would be a 2-to-1. So that would be my trade setup there. Anything after that would be free money. Okay, and you're also getting divergence here on the TDI, if you see that. Okay, so you're getting divergence on TDI, multi-session type 2 trade setup there. So let's go ahead and let's see how this plays out. Going straight down, look at that. Nice. All right, so this went ahead and tagged, went literally to structure. You see that? Previous day's structure. So if you to follow this, I mean, this is like damn near 4.5 to 1 risk to reward ratio on this particular trade. So, very good trade. Get to all right. So here, if we're already down here, like the only solution for me I would see is a continuation trade, but you would need price action to come all the way back up to the 50 and tag that 50. I mean, you could get possibly a type 1 here, but I highly doubt it. The TDI is all the way at the bottom, bottomed out. So, you know, leave that open as a possibility, but highly doubt it. Hmm. There we go. What do you think about that? The question, I think the biggest problem is that you're going to probably have to tag just the 50. If you're thinking about this being a type 1, because you have 1, 2, 3, 4, 5, 6. I mean, you have, everything there, obviously, so that's fine. But yeah, I think the problem that you're going to run into is the risk to reward ratio is just not there. I don't think it's there. 13. Yeah, you'd have to make it basically to the middle of the range for this trade to be viable or for the trade to make sense. So a better setup for me would be if you were to do maybe half, if you get a pullback, and maybe do half the candle like that. And that's a 2.5 to 1 risk to reward ratio. So for me, this would be the trade that would make sense. Would be a 2-to-1 risk to reward ratio but only if I get a pullback that's like half the candle. Okay. This is what would make sense to me. Let's see what happens here. Okay, so you get a pullback. Yeah, see? Yeah. It only goes literally to the 50. That's it. See that? So, where's the pullback candle at? Is it here? So you get 1, 2, 3. So 1, 2, 3, 4, 5, 6. So literally right at the 6th candle it tags is when it tags the 50 there. And so it's 2 to 1. So that would be a trade there for you. And so where are we at right now? If we look back, $166 or so. Yeah, we're getting pretty close. Okay, let's finish off this week here. Wednesday. All right, so this being what, Thursday? So this is Thursday. You see what the price action did in London here. All right, so here's Thursday US session. You can see that because we're arriving peak formation low, the only option that we have here is essentially a type 1, a multi-session type 1 at that. First leg is here, second leg is going to be here. There's what, 1, 2, 3, 4, 5. There's plenty of candles between the first and second leg. And essentially, what are we looking for? We're looking for an entry candle. So let's see. There you go. There's your friggin' entry candle. But that's going to be way too big. Let me see here. Yeah, it's going to be way too big, I think. Yeah. 27 pips. That's way too much. Yeah, you'd have to go. You'd have to go way high. Oh my God. Yeah, that wouldn't make sense. Unless you get a pullback. A pullback to like here, half the candle. And that right there would make sense. That would be a way better trade right there. That would be the trade that I would take. No pullback. So this is why pullbacks are important, is because it allows you to essentially get into the trade. If there's no pullback here, then the math essentially for the risk just doesn't make sense. Like if you're thinking, I mean, this is like a 27 pip risk. That's crazy on that. If you were trading gold or something, that's a different story. Maybe, pound NZD or something like that, or any of the NZD AUD pairs. But man, that's way too much risk. It's not worth it. Especially when you have other pairs that you can potentially have setups on. So very important that you understand that yes, it's a setup, and we don't even know, does it go all the way up on this particular one. Yeah, see, it doesn't even, yeah, it just goes sideways. So yeah, so I mean, you could see why it would not have been worth taking the trade. You see that? Not even to go up to the 200. This is why I wouldn't take it. If you're going to take it, you take it down to where you can get a reasonable entry that makes sense. Okay? And this is where you can start. If you're going to do something like this where you're waiting like halfway down or whatever, you could put in, let's say, a buy limit order here where you actually want the entry. And that way, if it either goes down and gets it, that's great. If it doesn't, then you miss it. You know, if you're looking at the specific trade setups where the candle's way too big and the only way you can get in it is if you get a really big pullback that goes half the candle back, then that's where it would make sense to use those buy limit, sell limit orders like that. Okay. But anyways, let's go to Friday. All right, so Friday here. All right, clearly straight move up. I mean, you didn't even get a trade in London session at all. It's just straight one directional. You could possibly get a type 4 here, but all right, so what's the only option here? Right, when you look at this, what's the only option? The only option is a multi-session type 1 trade. That's it. Right? That's the only option that you have here is a multi-session type 1 trade. Now, if you start looking at the TDI is already telling you what's happening. Do you see this? Look at the TDI. Let me put on the other one here. Look at this candle here on the TDI, and then look at this candle here on the TDI. You see the divergence that's already happening? See how this continues to go up while this is already going down. Right, so this divergence is already here. It's already telling you what's going on here. Okay, so it's already telling you what's going on here. So, I mean, right here, this would have to be the second leg because of this candle, and you already see the TD already going down. So again, you would have to be like, hey, is this a trade worth taking? Well, it would have to be, it's only a 12 pip. Yeah, I mean, it's only 11 pip. It's not a bad risk to reward ratio, actually. I thought it was going to be pretty bad. For 2 to 1, you'd have to take it here. Ideally, you want to pull back. Ideally, you don't want to pull back. Because if you can get a pullback, you can get a trade that possibly does this instead. That you can take to the 50. You see that? That you can take to the 50 instead. Because if you can take it to the 50, it's a 2 to 1 risk reward ratio, and this trade is more likelier to work out in your favor if you're taking it to the 50. So this is, and the only reason, this is a railroad track here, but it's right at the beginning of the session, so super early, right? So typically you're not going to get into trades like this super early, but like when you start looking at the TDI and you start seeing divergence this early on, typically the TDI is really good at telling you this, because you'll notice that the second leg, if divergence is happening, you'll notice that the second leg is already gone, you know, on the TDI. And while this is still forming, trying to go higher on the TDI, on the price action. Okay, so this would be a good example of where you would want to do, like, let's say like a sell limit order, right? And you'd put, let's say, the sell limit order here, and you just put your stop loss and put your take profit. And if you get a pullback, cool. If you don't, it's whatever. It doesn't matter. Okay, so let's see if you get a pullback or not. No pullback. No. Oh. This might have triggered the trade. I don't know. It's close. It's like right at the damn line. So I don't know. this could have triggered the trade. It may have not. But you could see, does this just go to the 50? No, it keeps going. Oh wow, look at that. 200, middle of the range. Look at that. On a Friday, go trade, go on a Friday, goddamn. That's a big move on a Friday. Man, you don't get those that often like that. This doesn't happen on a Friday normally, so it's definitely one off. But you see the potential, right, by setting up the the sell limit orders. They just allow you to get into the trade at the position that you desire, that you want. Okay. And so, I mean, this would have been 62 pips. Ideally, first take profit is, 50, 200, and then literally third, fourth. You can start using the lines after that. Third, fourth. So this is a good another thing as well, is like if you're using the EMAs to take profit, like you're going to use the 50 to take profit, the 200 to take profit, and then the 800. In this case here, like when you have this kind of scenario here, where you have the 800 above you and then 50 and the 200, once you're done with the 200, you literally start using the middle of the range, the bottom of the range, and then if you need to go further than that, start looking at structure from the previous day, right? So like this low here, and then, so forth and so on. That makes sense. All right. All right, so that's 2 weeks of trading the US session. And I mean, theoretically, on this particular week, you would have had what? 1, 2, 3, and 4, possibly, if you would have done it the way that I showed you with the sell limit order. So every pair, as you can see, every pair is different. There's some pairs that produce more trades in the US session, other pairs that don't. My suggestion is just start with the pairs that have USD in them, either USD in them or CAD, right? Because they both trade in the US session most of the time. So that's going to be my suggestion for pairs to start out with. If you're trading the London session, I mean, you could pretty much trade anything. That's the advantage of trading the London session, is because a lot of pairs move in that session anyways. And a lot of these pairs will move, by the way. Euro AUD, Euro NZD, Euro JPY, they will move in the US session. I'm not saying that they won't, but if you want more likely, movers, if you start backtesting Canadian pairs, USD pairs, you'll find that those should prove to be, the better trade or the better pairs to trade in the U.S. session for obvious reasons, because those specific currencies are trading high volume during their own session. Okay. All right. So let's go ahead and go back and let's talk about homework. All right. So let's go ahead and let's talk about homework. So pretty simple. Same thing, you're going to continue to backtest and collect data. The goal is to get to the current price action. If you've already done this, like if you've already reached current price action, right, go and start another pair. Go and start another pair if you've already gotten to the current price action. I'm sure many of you have, and that's cool. I love it. It's great. But now go do it on a different pair. The more pairs that you do it, the better that you're going to understand yourself as a trader, and the better that you're going to understand what pairs work in your favor and what pairs don't work out in your favor. Remember to take your time backtesting, quality over quantity. Okay? If you've done 100 trades in that spreadsheet, send me the spreadsheet so I can see, what the wins losses ratio is, where you're making the mistakes and all that good stuff. As you're sending me these spreadsheets, please keep in mind that I'm literally going through every single trade. So there's, 12, 10, 12 of you in this class. So it takes time for me to give you feedback, okay, or to see what's really going on. So just hang in there with me on the feedback, okay, because I'm literally going through all the different trades. And like I said, repeat the process on a different pair if you're already done with 100 trades or gotten up to current price action. The important thing is 100 trades. I need 100 trades so I can get a good quality sample size of different trade setups that you're taking. Okay. So take your time, guys. There is no test this week. Again, this is all about collecting data, doing the back testing. This is about doing the work that nobody wants to do. All right. So quality over quantity. Take your time doing it. Do it the right way the first time so you don't have to keep doing it over and over and over again. All right, guys, I hope you enjoyed this week. Thank you so much, and we'll see you in the group session.